Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up on this Fed Day, September 18th, Wednesday, 2024 at 7 p.m. Central Time. Wanted to let some of the markets get going, and as you could see, a big rally happening overnight in the stock market. I'm laughing because the moves today were violent, to say the least. If you watched at 1 o'clock to 2:30, this was what was going on, just like that, in the stock indices all over the board. The gold market down a little bit, silver down about 18 cents, but they're bouncing. If you stay up in the stock indices, it'll have a gravity pull. You're back up nearly 45 points in the dollar index, down that amount here. So wait a minute. The Fed's cutting interest rates. Dollar shouldn't be up, it should be down because that's generally a weakness to that. Bonds and notes, they're actually, remember, when you fall in futures, you're adding yield. What's going on there? And the strength in the dollar hurting the energies to a degree and not doing any favor to our exports in grain. So what's going on? I want to repeat it, and don't tell it to your friends. You buy the rumor, you sell the fact, and that's what's going on in them. I wish I could tell you that that's what's going on in the stock market. It's bucking that idea by coming up here, but we'll get to the chart action on that in a minute. Let's, for a moment here, though, take a look, if we could, at the day's event. First, the Federal Reserve, the monetary policy statement. They took the rate up by 50 basis points, down by 50 basis points to 4.75 to 5. The vote was not unanimous. Governor Michelle Bowman dissented, and that was the first dissent in nearly, 20 years or so from what I can recall. The jobless rate that the Fed is expecting at the end of the year is 4.4, so it's going to be 0.2 higher than it is right now. That got the Fed's attention. And here's what they're looking for in the markets. They're showing the Fed fund rate a median number. The word is median. That's very important. Not that it'll end at 4.4, a median of 4.4, 3.4 in 2025 and 2.9 in 2026. They are still on the goal for 2% inflation. Do not think that the Fed is evenly balanced in what they're looking at now. Now what they're looking at in a very serious manner is wages, labor, that is weaker than what they want, and they want to get ahead of the curve. When asked the question, had they had the revisions, the word is revisions, to the jobs data, had they done anything different at the last meeting? Well, number one, the proper answer was they didn't have it. There was discussion about a 25 basis point hike, and he can't say what the members would have thought. But we know that. We know by going 50, we know they thought, had they had this, they'd have gone 25 then. So now they're caught up with that. That opens the door for more 25s or a possible 50 the remainder of this year. But keep this in the back of your mind. As the Fed watch page is showing and not agreeing with, you're really talking of taking the median only down 100 basis points next year. Where I went to school, that's 100 basis points is 425-point cuts. So it's not, there's going to be a lot of pauses, wait and see, pauses, wait and see is what I'm saying to you. Any way you want to cut it, that's pretty much where you're at on it. Let me see if I can get this to go where I wanted it to, and I don't know if I can. Let's see if I can get this to go back. Yeah, there, I got it. Tomorrow we're going to get the Bank of England monetary policy decision at 6 a.m. On Friday, you get the Bank of England decision. Weekly jobless claims. Now these take on big importance because this is what the Fed is watching. They said that today. That's at 7:30. They're looking for a down, which means strength in the labor market. Philly Fed business activity at 7:30. The Conference Board leading, lagging, and coincident indicators at 9. Existing home sales. Will we see a pop in them because interest rates for most of August were falling? You ended up about 6.2, 6.3. Remember, that's where you're at now, so you were slightly above that, but coming down, maybe 6.4 at the end of the month. And energy analysts are calling for the EIA gas storage to increase by 55 billion. So that's where I see the market at right now. Now I can take you where I want. When we look at the chart action, today's charts are going to be fairly important. So On a weekly close-only chart, the market is sitting here for the week up 0.47. You are still down for the month. With the current rally tonight, you're probably down for the month, I don't know, 0.2, 0.1, but you're down. And remember, September's often a down month of between a half a percentage point and a full one. When we come back to the chart action, all you did is you're challenging this area, getting a better definition of possibly a shoulder that we can work with and say, inverted head and shoulder, pick it up, you go. Or it pulls back down here and we see what we've got. Some traders will say, you got a cup if you're coming down. We'll find out just which one of the two we have. In the E-mini S&P, in the action, higher lows, higher highs, still bullish. Still bullish right through here. Still bullish right through here. The next resistance point, 57.19, supports 55.83. But to get there, you got to take out the last break low, which could be a bit dangerous for the market, and you're overbought as can be. So do I think I would tell my traders on that chart, just go in the morning and start buying? I can tell you no. If it goes higher, say la vie. That is not screaming to me that you have to come in right here. In the NASDAQ, you have the pattern of higher lows, higher highs. Look for the battleground right here, the 18 and the 100-day average. Still set up a bit wrong. You want to see that 18 over the 100 to get a more bullish situation out of it. It's sort of the wrong way at this point in time. In the Dow, it went for the highs again today, not carving out big new highs, but making them and staying overbought. Nothing I'm in love with there. Then I look at what the Russell is doing, and as you can see, a lower low, higher high. You've basically gone from the lower Bollinger Band to the upper. So in a nutshell, as a trader, as a chart analyst, no. Let somebody else have that. Then we get to the 10-year notes, and I wish I could tell you I was surprised. I left the arrows as they are for a reason. Coming in to today, you hadn't taken out this low. Now my arrows are going to have two of them pointing down up here. You've left the uptrend, and support should be 114 area, the 18-day average, and the 110 area, same play here in the 5-year. I loved leaving the old ones there. This is what you had in the dollar coming in. And it's fun sometimes to show you this, and I did this to show that. So you don't have a trend. If you rally, I'm looking for resistance at the 18-day average, but I don't see a trend. And I see support at the 110.8 area. Today's crazy. You went to both numbers and you were whipping all over, and tonight you're jumping right back up into that resistance. Are you trending? Absolutely not, all right? Or are you? You have a downtrend in place. You are trending. The key is not to take out this 183. If you do, you break the trend. You have an outside day down, take that out. All I'm looking for is 187. So I'm in the camp that is still bearish the dollar, but I wouldn't want my money deployed. Now I'd want to be pulling in my rein and going, okay, if you were short as I had my subscribers, and if you got out as I had my subscribers, you're having a good day. In the eurocurrency, look at how the market's fighting a battle at the 18-day average. So I'm going to say it again. If you don't take out 111.34, I see traders buying at 111.37. I think they're going to risk, believe it or not, throw out the window $40, $50. And if it holds and doesn't take it out, they'll say we're going back up here. We'll see. Is it a 10-star trade? Of course not. When you have to thread that needle and hope it holds. In the British pound, why would you go into the Bank of England statement? Let them do whatever they're going to do. After it happens, you'll see the reaction, and then you come in. Don't be the hero trying to guess. Then we come to Bitcoin, which has been in an uptrend. We talked about this yesterday. When it finally got up here, you had 2 days over the 18-day average. You're coming up again, as you can see tonight. So the resistance is right here, the 200-day average. The support's the 18. I don't like that it's overbought already. If it wants to extend even an overbought, the combination of resistance is now 63,600 to 63,939, the 100 and the upper Bollinger Band. Give the nod to the bulls at this point, but be careful about extending money in an overbought market. The market that is stalling and not wanting to act better is Brent. So now Brent's got a higher high, lower low. It's gotten away from being over, if you will, the embedded reading. You've had a rally into the resistance of the 18-day average. It should be running into a brick wall there. The same in the gasoline. A brick wall does not mean it's going to fail and go a lot lower. It's this bear market rally until you close over the 18-day average should run into its resistance there. The same identical pattern happened in gasoline. It completed itself. Heating oil lost the embedded reading. This is saying before you get down here, the odds favor you're going to get to 219.22. And I'm going to be leaving here the OCT natural gas probably as early as tomorrow. And it's time for you to move to the November. This is your battleground, as you could see. If the market gets under this low, look for the 18-day average. So tomorrow's going to be what I call a yin-yang day. And you're going to say, Ira, what does that mean? All right, it's time we discuss what that might mean one way or the other. And in a nutshell, what it means is that 1 o'clock, the Fed announcement. What time's that in Asia? In Europe, that's 7 o'clock typically, or later, depending on the part of Europe. The Fed chair didn't start talking to 1:30 and finish 2:15. Now you're a lot later. So what happens often is traders come in, the volume at nighttime is nowhere near as big it is in the morning. And the markets will start picking up volume 4 or 5 in the morning here as Asia and Europe traders start plowing into the market and showing you what they think is going to go on. I will show you what all that does in the morning in my morning futures. We'll review that. We'll look at what the reports come out that are going to come out and how the market's responding. At 6 in the morning, we'll have had in our hand what the Bank of England did, and I record my video right at that time, so I'll have it. Just go to iraepstein.com under the word research, and you can sign up for these videos there. They're out before 7 a.m. Central Time. And by the way, on my golds report on the website, this is the exact action I was saying that I thought would happen. Look at the slope you see in that report and tell me what you're seeing here. I'm Ira. I'll catch up with you all in the morning. Have a great evening.